All right, good morning, Checkmate crew. It's 30 minutes after the opening bell, the New York Stock Exchange at 10 a.m. Eastern Time on this Tuesday, January 3rd, 2023. Happy New Year's. This is our first session for the new year. Glad you could join us. So let's take a look at what's going on today. The markets it opened up a little bit above, and now it is giving up those gains. We're flat for the day so far. Of course, it's only 30 minutes, so we shall see what happens at the end of the day. Okay. One of the things that I wanted to go over was, we're about what is it now? About 3 weeks away from options expiration, and this options expiration is going to be a big one. This is the January 2023 monthly options expiration. I just took a snapshot of this, literally like minutes. I don't know, like 10-20 minutes ago. And so as you can see here, we've got some big options expiration, open interest, all the way up to about 4,000 or so, actually even beyond 4,000, but 4,000, we have this monster options expiration. This is the SPX options chain, the cash index. There's about 162,000 open interest contracts at the 4,000 strike. And that's just on the put side. On the call side, there's about 178,000. So, we've got all these big put walls, and we have put walls that go all the way down into the 3600s, even beyond, really. So we're hedged. Okay, it's safe to say that we've got a lot of puts that are in the money, and that could go further in the money if the market drops. We do have some big events coming up. We've got, this is not really a big event, but we've seen some big moves around FOMC meeting minutes. There is meeting minutes that get released tomorrow, and then we got a jobs report on Friday. Those jobs reports can also create big moves. If the job numbers come out quote unquote better than expected, that does put some pressure on the inflationary story. So, that definitely, it causes fear that the Fed may have to tighten further, as they've already discussed that they are looking for labor markets to soften before they loosen or change the trajectory of their monetary policy. But we'll see. Okay, so that's Friday. And then next week, the big one, we've got CPI data on Wednesday that comes out. I do think that as some of this data gets dumped into the market, we will see volumes increase. Today, we might see a little bit of a lower volume day. But I think tomorrow, and as the rest of the week starts going through, and we start getting into those FOMC minutes and the jobs report, I think volume does come back. We'll probably see a big move sometime this week. I think we're going to see some big moves. I would like to see the bigger move going down so that we can get some of our names that we want to get involved with, like silver miners and such like that. We've been talking about that for months. So I am still in the I'm still trying to accumulate positive delta in different parts of the market. And so I'm just accumulating very slowly because it is going to be a choppy ride with all of this coming up. But I do think that at some point, probably at the end of January, beginning of February, we might see some institutional demand come back. And we've talked about this from our tax selling thesis in December. The 30-day mark comes around that January 20th to 24th. Okay, and I do think that, and that happens to be also right after January OPEX. January OPEX will come out to be about the 20th. So right then on January 20th to the 24th, that week, that kind of that Friday to Tuesday, that's the 30-day. That's when the 30-day ends on that tax selling that happened in December. All right. And so we might see institutional demand come back then, but before then, who knows? We could see a lot of volatility. That's what I'm hoping for. I'm hoping we see some volatility. I'm hoping that we see the dollar actually come up as well too. Maybe see a little bit of a retracement in the dollar. That would be nice. That's wishful thinking, but we will see. I do still have those UUP calls. It'd be a great opportunity to unload that, but we'll see. Okay, the dollar. I am hoping that the dollar does go up just a little bit. Maybe that sends the markets down a bit, and so we can get some of our names a little bit cheaper. Okay, so that's what I see so far. As far as other currencies are concerned, just because we're talking about the dollar, we've seen some wild moves in the Australian dollar today. Actually, we saw some wild moves happening. Actually, if we look at our Australian dollar levels, it was higher. It started out higher in pre-market, Sunday evening our time, which would be Australia early morning. We saw the Australian dollar really rally, and it stayed there until probably around maybe around 3 or 4 a.m. our time here in the US. That's when it's really started coming down. And that was already the time China closed. So China didn't see the Australian dollar. During the open market hours in China, they did not see the Australian dollar go down. So I'm kind of curious as to what happens in the Chinese market tomorrow when they open. And we'll see what happens. Actually, that won't be tomorrow. That will be later tonight for us, but that will be tomorrow for you guys overseas in that part of the world. Generally the Australian dollar is a very good forward indicator for China. You guys know how I feel about that. You can go into the past videos and take a look at my ideas behind Australian dollar, but it tends to be a very good indicator. We're still above that make or break level that we've been talking about for months now. I think if it stays above that 640, even if it does pull back some more, let's say it loses that level, as long as it stays over 640, and then on the weekly chart it can create that higher low, I do think that that would be a very good opportunity to get it long on some Chinese stocks. But until I see that, I have no signal. So right now we're just kind of chopping up and down between the downward trend, the multi-year downward trend, as well as this make or break level. We've just been chopping around that now for I would say about for 2 months now. So it's Australian dollar, I think it's poised to make a big move. And we'll see which way it decides to go. But that's the Australian dollar. Some of our other currencies that we're looking at, the big ones for risk on, risk off sentiment is the euro, Japanese yen, and the Great British pound. Those are the currencies I'm looking at for risk on, risk off sentiment in the near term. Euro USD did sell off a bit, but the DAX and the euro indices are up today. So we're seeing a little bit of a divergence between currency markets and the equity markets in Europe, although this is generally the case that when the euro went down, the European indices would go up. That is the quote-unquote normal behavior throughout the years. However, starting from last year, beginning of 2022 with the Russia invasion, we have seen now a positive correlation where the euro drops, the Euro Stocks Index and the DAX will also drop as well too. And the reason for that is because of the fear that if Europe slows down, it cannot justify the higher priced euro currency as exports will drop off, especially in Germany. And if that's the case, then that justification for the euro being that high, that justification, it goes away. And so, we're starting to see, that at least for today, we're starting to see that opposite correlation come back, although that's just one day. We don't know if that's going to continue for this time period. And again, from last year, the correlations have been negative. So whenever we saw euro go down, we saw for last year, the correlation has been positive. Whenever the euro has gone down, we saw the Euro Stocks Index also go down as well too. Today, though, we're seeing the more quote-unquote normal behavior. So we'll see. I do think that if this continues down, that could put some pressure on risk assets. I still think that this negative correlation will still continue at least for the first half of this year. So if we see the euro coming down, and then, you know, I'll right now, I think the British pound is flat. Let's actually take a look at the British pound. Let's see, where is my British pound? Oh, here it is. Okay, the British pound is almost flat, although it was lower in the beginning of the session. So if we do see the euro, the Japanese yen, and the British pound all fall off, that could be a short-term risk-off sentiment. Right now, the Japanese yen is up. So we'll see if the Japanese yen does a little bit of a retracement. Euro also does a bit downward retracement, as well as the British pound. Again, risk off. We might see risk assets coming down a bit. Also, too, you know, this would cause the dollar to go up, which would cause our, you know, some of our precious metal plays to come down. Which again, I'm looking for a good entry into our precious metals plays. SILJ, I'm looking at you. SILJ today is up about 3 1/3 It was up about 4% today earlier in the session, but hopefully it does come back down. I do think that this is at least a short-term resistance around here at $11. We might see it come back down to support. I am looking for support at around under $10. So if we can get under 950 or so, that would be a great entry, I think, into SILJ. And again, we've been talking about this for months. I'm trying to stay patient. I'm trying not to FOMO into this. We shall see what happens. Okay. So that is, you know, the currencies and equities in a nutshell. One thing I do want to look at now that we're getting closer to the CPI print next week is TIP-TLT, which is our forward inflation looking indicator. It's the inflation protected treasury ETF divided by long maturity treasury ETF. Right now it's still in, it's kind of, well, it tried to bust out of this box. I would say the box is that 105 and 98 box. We've been in this box for a good part of 2022. We bust out of that box again. This, I think, was an anomaly. This is when we had all those bids in retail market for those inflation protected treasuries. It was the last time that inflation protected treasuries had a not over 9% return, APR. And so I think that is what caused a lot of this retail demand for inflation protected treasuries. Of course, after a few weeks, it came back down, and now we're back into that box again. I think that we chop around in this box, you know, and I've said this for months. Of course, we were wrong for this anomaly, but I do think that we're going to chop around this box until March or April or so, when I think that next commodity cycle starts. And again, I think it's going to start around that planting season for corn and grains, and we'll probably see all the commodities move up, as well as, you know, energy, metals, grains, foods, all of that will probably come up, and that's when we'll probably see TIP-TLT move up again. And then the CPI prints probably won't come in high until probably 5 or 6 months after that. Okay, so CPI tends to be 5 or 6 months lagging, and so we'll see. We're trying to anticipate when the next pop is going to be, just like we anticipated when the CPI drop was going to happen. You know, around May or June or so, we said that, you know, about 5 or 6 months from now, we'll probably see CPI prints come in much lower. Lo and behold, in November, that's what we saw. And so now we'll see what happens here. If we see this come up with commodity prices around, you know, let's say January, February, let's say March or April, let's say, you know, within the around that planting season, then we could probably anticipate an August, September, October print, somewhere around there, a higher print than usual. Okay, so again, this we're trying to think now 10, 20 steps ahead. So we'll see if we get there or not. But I'm watching this now again. ZF is the 5-year Treasury. What is it? Futures contract, the 5-year Treasury futures. It is attempting, I believe, on the weekly chart since I checked last. Yes, it is attempting to make that higher low. all right? If we start making a higher low on this and it makes another higher high, we could see a lot more of that money that's denominated in dollars overseas come out, buy their local currencies, and that would also be a risk on indicator. That would be risk on. So we would see probably the British pound, the euro, the Japanese yen all go up if we saw the ZF futures make that higher low, higher high. That's still about a few weeks away. If that coincides with the time where when the 30 days after tax selling is over, we could see a rush of money coming into risk assets, and that would be that 30-day period is 3 weeks away. So if in the next 3 weeks, if this comes up and makes that higher high, I mean that would be pretty compelling risk on indicator, forward-looking indicator. So I'm watching this for the next couple of weeks. ZF and those currencies, I think it's going to be huge, and we'll see what happens. Okay, but my eyes are on that January 20th to 24th mark. Okay, so as we get closer and closer to that, we will discuss this in more detail. Okay. Cryptocurrencies, I still get a lot of questions via DMs about cryptos. We saw actually a huge decrease in open interest in the final weeks of 2022. The open interest now is even lower than where it was. I believe now it just fell off for the end of the year. End of the year, it was like a 4.9 billion. It came down into the twos. Okay, so there's even less participation in the options market in cryptos. So that options market is kind of useless to us. We want more participation in it to see if price will get pulled or pushed by the options market. But until we see that, $6.5 to $7 billion in open interest in the options Ethereum in the crypto options market, it really doesn't make sense for us to track it. However, having said that, we're still chopping around. I mean, it literally is not doing anything for the last, how many weeks? 1, 2, 3, 4, 5, 6, 7, 8. I mean, for the last 2 months, we've just been chopping around this range, around this line that, this important zone line that we've drawn in the beginning of the year, this 1241.46. We've just been chopping around this. So I really don't see a trade in this yet. I'm still remaining patient. I really want that 0.60. This line also, this ETH to gold line is a rising trend line. So right now we're at I believe, yeah, starting in about a week or two, starting in mid-January, we're going to be at 0.6 on that line. Okay, so right now still it's around 0.59 or so, but still I don't see a trade unless we get there. I really just don't see any trade in this. Right now it's just dead. It's just chopping around this small little range. And if you're using leverage, I mean, it's still big enough moves where you can get chopped out, if you're using leverage on this. So I just don't see a trade in this yet. I'm just going to exercise patience and discipline. I'm going to wait. ETH to gold ratio, 0.59 to 0.60. That's when I'm going to make a move. Nothing until then. I just don't see a trade until then. Okay. Today, we got lower than usual volume. I just don't see the volume rushing back as of now. Of course, this is the first day back. I just don't see the volume coming back yet. Maybe later this week we might see something. Maybe tomorrow. After the FOMC minutes, we might see volume coming back. Most traders are not on vacation. They did come back. I am seeing a lot more activity in some of the networks that I belong to. Although I don't see them placing any trades yet. Perhaps tomorrow that might change. But just looking at energy markets too, I'm getting a lot of questions on energy markets as well. Nat gas is down about 9-10%. We're seeing milder than expected weather in Europe, and so we're seeing also the European nat gas prices coming down as well too. We'll see. Now there is some winter weather here in the United States. We just got through a big period of snow and ice towards the end of 2022. A lot of that ice is now melting. We've got another storm coming. However, I do think afterwards we are going to see some warmer than expected weather here in the U.S. as well too. Maybe the nat gas market is running that. I'm not sure. Okay, I don't see a trade in this until perhaps that season, that March, April, when we see commodities come back. Perhaps that is the time when we should get long on some of these natural gas and oil names that we're in. Speaking of oil, right now gasoline is coming down. It was coming up in the last few weeks of December, but now it is coming back down. On the weekly chart, it looks like now it's trying to form a lower high. Let's see if it makes a lower low. If that's the case, crack spreads narrow. We could see oil come down. There is a big OPEC meeting coming up. We'll see. I think it's a pretty compelling buy if it gets to 60 to 63 zone. That would be a compelling buy zone for me, at least on crude oil. So that's what I'm waiting on. Also, as we get closer and closer to that March, April zone, when I think commodity prices are going to come back, I am looking for a trade in MOS, which is the inflation stock. The inflation stock is Mosaic. Okay, we might see this come lower until March or April or so, and if that's the case, if we see around March or April that this comes down and it gets into the high 30s, I think that would be a pretty compelling buy on Mosaic. All right, and so that's my next play that I'm looking for also too. So silver, Mosaic, those are all on my watch list to get in the next, let's say, next few weeks to few months. Okay, silver, most likely we're going to get in a lot sooner. Mosaic, I see us getting more into this as we get closer to that commodity cycle, as we get closer to that planting season for corn and all the other grains. Speaking of corn and grains, I mean, we might as well take a look at that since we're talking about it. Corn, this is the corn market right here. Saw a little bit of rally there. Okay, we shall see. Before planting season, if it can get down here again, if it could get down here into the under the 600s, I'd like a crack at that. Okay, but it does have to come down to our levels. I don't want to be chasing this right here. Okay, or I might not even play corn at all. I might just use corn as an indicator. Not sure yet. Okay, I do want to see very good value though before I get in. Okay, like that, it has to be under 600. It has to be that 575 zone, 575 to 585. That would be a compelling buy for me. Okay. And then we can hold probably some call spreads, 3 to 6 months out call spreads. That's what I would use on the corn futures market. So that's the play that I have for corn. Anything else, guys, you want to look at? Today's going to be a shorter episode. Just because volumes are lower, I thought that we'd see a little bit of a bigger move in overnight markets before the cash market opened today, but that's not the case. So probably we'll see bigger volumes tomorrow. So hopefully I'll have more to say tomorrow and Thursday. But anything else you guys want to look at? Any tickers? Any other topics? We got a question here from one of our Discord members. Why would you say, could you explain Mosaic more? Why is it a inflation stock? Very good question. Okay, so why is it the inflation stock? Okay, well, first of all, let's just, I'm just plotting. This is the plot of US CPI to Mosaic, and as you can see, all right, generally Mosaic tends to front run, all right, and follow inflation, all right, as you can see. As inflation ticks up, okay, you can see Mosaic does better. Okay, when inflation is coming down, we see that Mosaic comes down, and then whenever whenever inflation is set to come back up again, sometimes it's a little bit early. All right, we do see that Mosaic pops up again. Okay, it's got a pretty good correlation to inflation. Okay, so not only does it behave in that way, but Mosaic is a fertilizer seller. They sell fertilizers. Okay, they sell fertilizers, and a lot of so whenever inflation goes up, you see general commodity prices go up. Okay, one of the commodities that goes up is food commodities, grains, and whatnot. As it gets more expensive, okay, farmers try to increase yield wherever they can as pricing power increases for some of these commodity sellers. So to increase yield, they are going to buy more fertilizers. Okay, and fertilizers too. Fertilizer companies like Mosaic also have pricing power as inflation goes up. All right, when natural gas, a lot of the fertilizers are made via some processes and some of the materials that come from natural gas. So whenever they see pricing go up like this, they usually are able to charge more to their customers, which increases their margins. And so we see Mosaic tend to do extremely well when inflation goes up. They've increased their dividend this year. They're probably going to increase their dividend again next year. We actually called it back in June. I said that Mosaic was going to raise their dividend, and within about a month or two, they did. Okay, and so I think in 2023, as we get more into that commodity super cycle again, and then commodity prices start coming up, probably around second half of 2023, I think Mosaic does another dividend increase because it's just going to make so much cash as inflation goes up. All right, and that's why Mosaic is the inflation stock. And Mosaic actually also peaked out around April in the summer, around April, May or so. It peaked out then too. So that was also another indicator for us that we were going to see the CPI data come down in around around March or in about November or so. So this April, it was January, February, March, April. April's about what? Fourth month. So it took about 7 months after this. Okay. I do think that this will come back up again. And again, as we get closer to that planting season, I think this will come back up again. And so as we get closer to planting season, I want to get long on Mosaic. Hope that answers your question, Maya. That's why this is the inflation stock. Any other questions? Any other questions, comments, rude remarks, anything else you guys want to go over? Going once. Going twice. Okay, then in that case, we'll call that a day today. That wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. No sub fees, no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, I'll be back on tomorrow and Thursday, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time. Hope to see you guys then. Trade safe, guys.